Welcome back to the Daily Trading Journal. It is choppy out there, folks. I had quite a rough day as far as like choppiness is concerned. I did follow some rules by cutting my losses quickly, which really helped me a lot. But we're actually going to discuss why I think cutting my losses quickly in this certain market that we're in, people are considering it very much a bear market with the looming recession. I don't know if cutting my losses quickly really was in my favor, and I'm definitely going to dive into that in this journal. But first and foremost, this is for entertainment and educational purposes only. This is not financial advice. I do not advise you to follow my trading strategies or plans or picks, whatever it might be. For all the legal disclaimers, do your own research, get your own education, and find a certified financial planner if you are worried about losing money. The markets are risky. Losing money is always possible, and so please protect yourself by getting educated or finding a certified financial planner. Okay, with the disclaimer out of the way, let's jump into the Daily Trading Journal. Now, first and foremost, I want to let you guys know that I'm still sitting in GRWG at this moment. The reason I'm holding on to this one so long is it continues to grind upward with quite a bit of choppiness. And so what I saw in the beginning of my trading day, I tried to trade GRWG, yep, and it was really choppy. And so as you can see here, from -1 all the way to -2, this here, I lost 5% because of the choppiness. If I would have held my original position from 428 to where it currently sits right now at 454, I would have been much, much, much better off than following the choppiness. So let's see, currently at 54, be up 6% on the stock rather than losing 4%. And now I'm re-entered at 449, currently up about 1 to 2%. So in this situation, in this current market, depending on the stock I am trading, I may want to hold longer. Now, what I mostly look to trade is fast, high volume momentum stocks. For instance, let's jump into MULN. I traded Mullen. Let's see what I traded it from. I traded Mullen from 19 cents or 1869 up to 2019. No, that's incorrect. Sorry. I traded it from 28 cents up to 30 cents. So I made a really nice move here as Mullen was making its way up. So let's see. 28 up to 30, and then went ahead and sold out at 30, and then it cut back and broke off. So I was really happy with that trade. It had some pullback, and then I played it up about 2 cents a share, maybe a good clean 8%. However, when I took that same strategy over to GRWG, I didn't show you again. I'm really bad at this. I got to work on this. Okay, so let's show you once more. All right, so MULN had a nice ride up, pulled back. I got in at 28, rode it up to 30, sold right near the tip of the high of day, and now it's just broken off ever since then. It had a little bit of pull, a little bit of run up here, but not a lot, and I wasn't playing it at that point. Okay, so that was a really good move to get in quick, get out quick, and that really profited me very well. However, with GRWG, I did not benefit from that quick move. In fact, the choppiness really pushed me out. And so what I really need to focus on in the next couple of days, weeks, months ahead is to play the momentum stocks as momentum stocks. So if they're moving quickly, they have a lot of volume, follow them up, get out. These more slow grinding stocks with a lot of choppiness that we're seeing in this current market need to be played much differently than my strategy I've been playing for the past few weeks. As you can see, it had a nice fast move up here, but ever since that move, it's just slowly moving up. And I can really benefit from this slow move up. Again, I forgot to show you. So I could really benefit from this slow move up here, right? So if I got the quick move, awesome, but I missed this one. It finally popped up on my scanner right about here. And then I tried to make my entry, and this is where I got spit out a lot. I should have held it from 28 and just watched it move up because it continues to have some choppy moves, but it keeps making higher lows and higher highs, as you can see. So that means we're progressing upward. It's a good, healthy pattern. And so this is one that I personally want to hold on to because it keeps moving up, making higher highs. So I'm playing that much differently than I would play something like MULN, or I would play XELA. Let's go ahead and pull up XELA real quick. This one did pretty well for me today. So XELA, let me zoom in and let's check where I traded this. So I traded this from 19 cents, about 1869 up to 20. So let's see. So 1869 up to 20. Now I could have allowed the pullback to do its thing and then played it all the way up to 22. And again, holding a little bit longer, I think would be healthier in this choppy market that we're currently in. And so that's really what I'm trying to focus on, is hold my winners longer, cut my losers quicker. And I've really done well cutting my losses quickly. I have not had above a 2% loss today. And yesterday, my highest loser was 6%, which honestly, I just held that too long. I was like, let's just hold through this and see what happens. And that was SPRC. And if you were in the market yesterday, you know that SPRC cut back very quickly, and it was not a friendly stock. So I definitely glad I got out of that one when I did. But overall, my average losers have been 1% to 2%. But I have a lot of them, and I think it's due to the choppiness. So as you can see yesterday, we had a lot of choppiness in the market, and I did a lot of losses, had a lot of gains, ended up breaking even. Today, I'm sitting up at about 10% on the day. Super happy with that, trying to finish the day off strong with RGW. I want to get that up to around the 64, and then I'll sell out of that to get my 10% gain for the day. I think right now it's at about, let's see, where's it at? It's at about 59. So it's trying to break through that 60. Once it breaks through that 60, we should see some more. There it goes. Some more momentum up. You just saw that breakthrough. That should give us a new high. It's just continuing to do this. And I'm just really tempted to continue to hold this throughout the day. But me being kind of a short-term momentum trader, it makes me nervous to continue to hold it, just because I, go on, start filming my laptop reviews and jump into my tech channel, and I really don't have a close eye on the market. So for me, it works really well to be a momentum trader at this moment in my career. The YouTube channel keeps me very busy. I'm trying to add in stock trading. If you guys are watching these trading journals, thanks for being here. Know that this is not my main thing. This is something I'm wanting to learn. And I know a lot of people have been a little on the annoyed side that my channel is bringing in some of this, but I want to show more of what I'm doing, more of my personality, more of my interests. It's not just laptop reviews. I have a lot of things that I like to do, love to learn, love to grow. And so that's why I decided to release these on the channel, just show more of what I do around here. I know that a lot of people will be frustrated because they're here for laptop reviews. And why do you need to talk? We don't care what you think. Just tell us what computer to buy. And I just want to do more here on YouTube. I just don't want to be stuck as the laptop guy. As much as I love it, I love reviewing laptops, I'm learning other things and doing things and trying things. And so I wanted to share that this journey with anybody who's interested in watching. Having a lot of comments and a lot of feedback about day trading, how day trading is something that you will only lose money doing. Actually had a conversation with my father-in-law this past weekend, and he brought up a lot of points about day traders. Most day traders lose, and there's only a few pros, a handful of pros in the market that actually make a very sustainable career out of day trading. And so there's that as well. And, I'm fighting an uphill battle mentally with doing this well, with learning the skill. Personally, I enjoy the skill of understanding and reading technical patterns. I don't like digging through all the fundamental data to know if a company is a good company and I'm going to buy it and hold it for 20 years. It just doesn't interest me. I'm a gamer at heart. I grew up playing Call of Duty, and for me, I like strategy. I like charts and patterns and rhythm and flow. And that's what I find, or that's what I'm finding in day trading is it's this very engaged, very involved, very intense practice that I'm really, really enjoying. And so that's what I want to do. Maybe it's not the most profitable thing today, but I think sticking with it, I look forward to hopefully the skills that will build and the eventual monetary gain that may come from it. For me, investing in trading is much more about money. It's a lot about a discipline of the self. And that's what the daily trading coach talks about. He says, he's mentioning how people like Aristotle, people like Seneca wanted to refine themselves. What they did was not for money. And if you know much or read much about Socrates, Plato, Aristotle, these were not wealthy, did not see wealth because they were philosophers, because they were bettering themselves. If there was any sort of wealth that happened, it might have been more on the accidental side of things. I don't really want to be an accidental. I'd like to be very specific about it, which is why I think trading is something that stands out to me as something I want to learn and grow and do. But this is truly more about a discipline of my life than it is just about a get-rich-quick opportunity, because that is not trading. Trading is not get-rich-quick. It is lose money fast if you're not careful. And so I encourage everybody to be very careful with their trading. Start small. Don't increase your size too quickly. That's what I'm really trying to focus on, trying to build the skill. Even though, I know right now, like I mentioned earlier, with the looming recession that everybody keeps talking about, it's very scary. You want to make money quickly. You want to get ahead of the curve. You want to build these skills so you can protect against, the loss of jobs and the loss of money and feeding your family and having a place to live. And these are things that I feel these things. These are emotional barriers that actually can get in the way of learning trading, because you're so focused on, or I'm so focused on, wanting to be profitable, wanting to prove that I can do this so I can increase my size and start to make money. But really, that just clouds the performance that you're going to put into it. I talked yesterday about performance anxiety. I really improved that today. I think I still had some. I think the choppiness of the market really made me think about the results a lot more than, this stock is just moving in its pattern, right? Like, for instance, GRWG, continues to move in this up and down and up and down and up and down pattern as it makes new highs and higher lows. And so you have to kind of put off the feeling of making money, because as it comes down, that is anxiety provoking, right? But if you look at the pattern, if you follow the pattern, if you stay faithful to the trade that you're in and to the plan that you have, it can be profitable. Or you're going to end up like me on the day, giving back, 5% of my profits due to choppiness, when in fact the stock ended up rising and it ended up being profitable, and I was just scared to hold it. And so I think one of my things that I need to focus on a lot is having specific trading plans for specific setups. Right now, I've been really focusing on momentum stocks, and that is something I can get in and get out very quickly. But with these low, slow grinders, it's almost like diversifying your portfolio with, Roth, or a good Roth IRA, aggressive stocks like, maybe say something like AMD or NVIDIA back last year. They were moving very quickly. And then something a little more slow, like having a mutual fund, or to kind of hedge against some of that quick moving, aggressive opportunity. But then again, if it's too aggressive, it can dip too quickly. So you have kind of these to offset some of the ones that pull back really quickly and kill your percentages. So if I could get into a stock early in the morning, have it rise 5, 10, 15, 20 cents slowly throughout the day. There we go. We just had another move on FRWG. So again, made a new high at 467. Again, it's continued to just kind of grind up slowly. So if I can hedge something like this, like GRWG throughout the day, and then play something like XELA or MULN for quick moves, then if I do take those small losses, but then do take the big gains on those quick movers, this can offset those small losses because it was a slow grind throughout the day. But then I can still be in those momentum stocks to hopefully get those big, 10 to 12% moves that I'm looking for as I'm trading. So again, this is all just musings of my own mind as I'm working through my trading journal, and excited to be sharing this journey with you guys. I know there'll be a lot of comments below trying to get you to invest with them, and all these telegrams and texting, and this is my financial person, they've made me so much money. Ignore all that. It's just spam. So keep an eye on that. Don't get sucked into all that Telegram stuff. Man, I've got so many Telegram spammers right now on my channel. It's insane. I'm like doing all kinds of things to block them and do words and stuff like that. So just keep an eye out. Stay safe out there. Don't get spammed. You're actually more likely to get spammed on the internet than you are to get burglary. So keep an eye on that. It's so easy to think, especially when making money, especially with the looming recession, that, you just want to get rich quick. Maybe this person will help me invest and I'll just give my money to them. Don't do it. Like, learn for yourself. Another legal disclaimer, learn for yourself, get educated. or get with a certified financial planner who can help you create a plan and system for you. All right, so overall, I always like to end it with kind of the rules for tomorrow. With momentum stocks, cut my losses quickly. So those gap and go momentum stocks moving very quickly, ride that momentum, ride that volume, get out to take those percentages. With these slower grinders, so for instance, we're going to look back at GRWG. Look, it hit 467, and now it pulled back. And this is something where I've got to make sure we're seeing these higher lows and higher highs. And look, it held that support level. So let's mark that out real quick. So it held that support level. So that's good. We're still moving up. Now, if it wants to break down through this, we might consider selling it, but we need to make sure I'm not getting out too quickly on these more slower grinders. So that's number 2. Okay. So get into momentum, get out quickly, take those predictable moves. With these slow grinders, stay in longer, get in, hold, watch for the grind, watch for the choppiness, and just ride it up. These are kind of these stocks that I can hedge some wins against maybe those quick cut my losses quickly for the more momentum stocks. Again, watching for the tap test. I've been doing really well on that. So some of the rules that I'm following really well will be cut my losses quickly, watching for the tap test, and really trying to focus on the slow grinders. And see, here's my concern. This is something that I don't like to see. So we're here trading right now, and this is why I don't like holding stocks a long time personally. Like, look at this. Like, we're cutting back so hard. Like, I guess somebody said that was enough, whether it was, an algorithm or it was a big account that they just wanted to dump out their stock. Now, I have I'm at 449 on this. So now I'm at a loss, on this stock. And so this is kind of the thing where I struggle with how long to hold stocks for in regards to day trading. Because, this could reverse quickly and come back up, or continue to break down the rest of the day. And so this is where I get frustrated. So there we go. We're grinding down. I was easily up 10% on the day. And now if I sell this, I'll probably be up like 6 or 7%. And so the question is, do I hold through this pullback? So let's see what that would be. So let's see, we're at 45. So down 1%. So I'm up 6% on the day, and I was aiming to be up 10% on the day, And so it's like really trying to work through this, will it keep its strength for the day? And right now, I don't know. And again, that's why I really like trading momentum stocks where you move a lot of volume, a lot of trades happen really quickly, and you can get in and get out and take profits. They feel more unpredictable to me. They feel more like guesswork than they do predictable moves. So it looks like we're testing that initial resistance level, and we're at 47 testing. A lot is selling off here, as you can see in the time and sales tape. And for me, this does not feel good. This is not something I'm enjoying watching happen, especially when, I was just up, 66. Let's see. Could have sold at 66, had my 10% on the day, and moved on. And I'm trying to find a balance between, I guess you could say getting greedy and allowing a stock to play out. And I really don't know how to do that. So I'm gonna get out of that. That's frustrating. So 42. I think it sold out at 42. So 5% positive on the day. Really disappointed in that final move. I was feeling like I had some nice gains in the day, and that just dumped out, And so I went from being up, my highest up was about 10%. And now, we dumped down to 5. But overall, portfolio's up on the day, based on numbers, added about $100 to the portfolio. Now, I'm not trading with full size. That's just based on percentages, not based on actual money that's in the market. But again, I'm trying to simulate that I'm actually in. And to me, these percentages are extremely, they hurt or their big celebrations. And that's what I really want to stimulate, because I want to stimulate the feeling of loss and gain without the risk of immense loss and gain. And I encourage you to find your trading, the way you can learn and not blow up an account, because I think overall that's going to be really, really helpful when you're attempting to learn the skill of trading. I don't think going in full size is wise. To me, it's gambling when you don't know the patterns, when you don't know the systems. And so that would be my encouragement to you. All right, I am going to call it a day. Thank you so much for watching the Trading Journal. Be back tomorrow. We're trading 4 days a week. So comment below. Tell me about your journey, and love to just be along for the ride with you. I'll see you guys in the next one.